taking a look
Hi,
at the
Alishia.
markets. We're in the green. For how long is the big question, but it's interesting what's actually impacting this positive momentum, because yesterday it was good economic US data that triggered positive momentum, and the day before it was bad US economic data that triggered a rally as well.
I think maybe it's not the economic data that is necessarily triggering the rally. Certainly yesterday's durable goods orders resulted in the rally, but I think maybe the movement that we saw on Tuesday was more on the back of the resolving or imminent resolving of the political crisis in Libya. But I think what we definitely are finding is that all focus at the moment is on the annual meeting of the Federal Reserve Bank in Jackson Hole tomorrow, and the eyes of the world really is on Fed Chairman Ben Bernanke and the extent to which he will comment regarding further quantitative easing or support, not just for the US markets, but of course indirectly also for the world markets. And I think what we're seeing here is not necessarily just position taking, but rather position squaring. There's definitely a lightening of positions taking hold. There's caution coming into the market. Yes, there was the rally. Yes, there was a positive sentiment, but I think caution is coming into the market. And I suspect that as we get closer and closer to the key time tomorrow, we will see smaller and smaller positions being left open, waiting for that crucial announcement from Ben Bernanke tomorrow.
In your books, QE3, is it on the cards at this stage or not? If it is it a viable measure to be implementing in the first place?
I don't think it's on the cards at this stage. I really do believe it's premature to really be talking about a QE3. I do, however, believe that Bernanke is ready to provide the support to the market through other means if those are necessary. So if we continue to see some weak and contracting ISM numbers and production numbers coming through, I do believe that he will provide support. I think it's going to come down to how does the market interpret what he says and what he does. If the market interprets this as a QE3, then you'll see one type of reaction. If it doesn't see it as that, then it might be a different type of reaction. Do I believe that this is a viable solution? No, certainly not for the long term. All they are doing is extending the inevitable, and they're increasing the problem for the day of final reckoning, when the chickens do have to come home to roost. And I think they are trying to continue to buy time. It's uncertain to know how much of this is about a political survival game, and how much of this is that they're just not prepared to take the austerity pain that is required, the fiscal pain, to actually put the necessary measures in place. But the fact of the matter is that the US cannot continue to just throw more cash to the problem or at the problem, and this is not an ultimate solution. It merely addresses the symptom, not the root cause of the problem.
Exactly that. That's put players like Implats in a very precarious position right now, not too sure about the demand that they will be catering to moving forward. Despite that, we've had Implats saying that it sees strong fundamental demand for platinum group metals in the medium term. We've had that company out with numbers. Your overall view on a player like this within the context you've just highlighted, Nerina?
You know, there's really three aspects for me that we need to look at. The one is obviously the role of platinum as, along with gold, really in the space of precious metals and a risk aversion measure. And we've certainly seen very specifically in gold the role that can play. And the pullback that we see in also the PGM basket prices really reflects the decrease in risk aversion as Libya moves towards a settled solution there. The second aspect would be manufactured sort of use for the likes of the platinum group metals. And that will rely very much not just on, of course, on China or the East, but certainly world global production, and that will play a role in terms of the demand side of the equation. And then there's the very company-specific issue for Implats in terms of its operations in Zimbabwe. And certainly we got the news out today that they reported that Zimplats did receive a letter back from the Zimbabwean government to say that they have rejected their proposals around the indigenization, and they now have 15 days to respond with a revised proposal in terms of how they plan to take that on. It seems to me as though the much higher dividend that we receive from Implats, you know, the market was looking for 370 cents a share. We got 570 cents a share. It's almost as though Implats wants to reward those investors that have stuck with them and to say, thank you for sticking with us. Let us give you some of that cash back, because we're actually not quite sure how we will necessarily be applying that cash in the near future, and we'd rather rather give it back to you as a reward for sticking with us.
Well, Eleni Jacques caught up with the company's CEO a little earlier, so we'll be delving into that conversation, Nerina, and taking a closer look at what exactly plans are to take Zimbabwe on moving forward. In the meantime, of course, that global economic growth scenario having grave implications for our own. We've had South African Reserve Bank Governor Joe Markets reiterate concerns in terms of impact it's set to have on our economic growth prospects moving forward. And within that context, we've had retailers out with numbers today, the likes of Massmart and Woolies as well. Your overall impressions of those numbers?
Quite a different set of numbers coming out from Woolies compared to Massmart, and Woolies was really appreciated by the market. They hit a new 52-week high on the share price shortly after opening, so certainly an encouraging set of numbers from them. Very good set of results. Massmart not so encouraging, and it's interesting to read the comments that came with the results from Massmart, where they really are talking about not just the difficult trading environments, but also the constraining regulatory environment in which they find themselves. And the cost of that regulatory environment. Obviously, through the Massmart Walmart deal in recent times, they have been subjected to this a lot more specifically than many other companies in the retail space. But the other aspect that Massmart have also raised is the issue of productivity in the South African market, and how the strikes and the labour unions are affecting not only the direct productivity but also the perceptions of the market to international investors. And what we find interesting is when you look at as the risk aversion as really sort of declined in recent times, the massive outflows that we've seen from foreigners out of our equity market in particular. In July, we had around 2.5 billion rand flow out of our equity market, and so far to date in August, the outflows is over 9 billion rand. Mm-hmm. So it's not really surprising to see the rand at the level that it is at. Fortunately, it is to some extent supported by inflows into the bond market. So as much as the foreigners are going out of our equity market, they do still like our bond market. And obviously, Jill Marcus's next decision, or rather the MPC's next decision around interest rates, will also influence how the foreigners play in our bond market.
Yeah.
The shocking PPI number that we had today, certainly much higher than the market expected. I think what that certainly shows is that the rising sort of expectation that we will probably see a rate cut soon, I think has probably pulled back a little bit to that extent. But I think these are factors that influence inflation that really will not be swayed by any moves in terms of interest rates. But it certainly does all add to the decision-making process that the Reserve Bank has to go through.